welcome in everybody into another episode of Coinage here as we are witnessing a rather strong sell-off following the big announcement from President Trump when it comes to his tariffs and proposed tariffs there. As we watch those play out and see what is indicated, what the president wants to do when it comes to his proposed strategy, not just imposing those tariffs against Mexico, but also Canada, and expecting to see reinforced moves from them as we see this all play out. All this matters because, right now we're in a bit of a space of volatility when it comes to, how quickly the president is going to be able to change some of these things and implement them the way that he wants to. Obviously, of course, sometimes things go according to plan and sometimes they don't. The really big thing that we want to highlight today is just how big some of these moves are. When you look at the Ethereum chart, it's actually one of the larger sell-offs, the only ones that it trail in terms of being off, if you go 24 hours really from peak to valley, only trails the FTX explosion and the pandemic. The Terra Luna explosion in the pandemic. And so pretty strong unwind of what I think could be a kind of a repeat of what we saw with the carry trade, at least for Ethereum. This is the chart that we wanted to show off the top, which is liquidation heat map. Right now, if you look at it, most of the pain being felt in the ETH space, perhaps not surprisingly, when you consider just the percentage moves and kind of where people were. But again, I think it speaks to the idea of so many people enjoying what was a pretty nice, robust bounce back in terms of ETH ETF inflows. A lot of the excitement, I think, somewhat around what potentially the SEC could do when it comes to adding staking potentially to those ETH ETFs and additional yield. And so maybe front running that got a little bit, got people over their skis a little bit too much here on that one. I think that'd be safe to say, just giving a look at the liquidation heat map on all of that, particularly in the ETH camp. So again, not surprising to see the sell-off so strong, but a nice bounce back, at least in terms of finding a bottom around this 26,000 level for now. We'll see if that holds. And again, I think some of the big macro headlines out of the kind of Trump tariff news might potentially be a little bit overdone when you step back and think about everything, which is what we're going to try and do on this show to get us kicked off. Because, of course, it's not just ETH or Bitcoin or anything like that to pay attention to, but we might as well pull up the Bitcoin chart as well, just to show the relative moves, because a lot of these numbers do matter when it comes to psychological. Can it hold? Will it hold? Obviously, ETH did not hold that 3,000 level, but for Bitcoin, certainly I think getting back to that 100K level, not the craziest of things. I mean, I know that you got Arthur Hayes out there saying that, look, Bitcoin could go back down into that $75,000 level and everyone should be caught and ready for that. But if you really do step back and think about where we go, even he says by the end of the year, you're looking at 250,000 for Bitcoin. And so I would just kind of hold these moments in time. In fact, I would encourage you, if you're on a phone, obviously like and comment and tell us what you think, but also you can record these clips. We never delete anything around here. Everything's out there, and I would go as far to say that honestly, I do think risk reward wise on a sell-off like this, I was going back and looking, if you compare what's happening right now with ETH, and Coinage is walking the walk here. All of our treasury is basically in ETH, and we did not, and we're not selling anything right now. But point being, if you go back and look at, is there anything structurally different today than there was in the FTX? Sorry, I keep saying FTX. In the Luna unwind in 2021 or 2022? The question is probably not. And so, when you think about that versus what we're seeing today and what we saw back in other huge washouts, including the pandemic, by the way, then I don't know. I don't know if this should be on that same level. 25% sell-off versus back in the pandemic, ETH cratered by about 40%-ish. And so, comparatively, 42% to be exact. Comparatively, do we want to say that anything has changed all that much because President Trump wants to do some of this tariff stuff? No. And I use some of this tariff stuff, Texas, as a technical term. That is a technical term we refer to on this show. But there was a lot of interesting takes. I want to bring up Jeff Park's take because, he was on the show. I'll try and get him back on the show to talk a little bit more about this, because I do think it is pretty interesting when you pair what the president might be doing this time around versus the trade war back in his first term. Big difference there being that, he really did hit structural things in the first bit of tariffs. Back in his first term when it was steel, solar panels, etc. This time around, it's really seemingly tied to the drug war and stopping fentanyl from coming in across the border, even though some people dispute the idea that, Canada is really necessarily involved, or either one of these borders technically really being involved all that much. But specifically, what Jeff Park was talking about over at Bitwise, talking about the idea of don't exaggerate or overcomplicate what you might need to think about when it comes to what Trump's trying to do, because so much of his net worth is tied to interest rates, being a real estate investor. So I'm just looking at his thread, and obviously we'll post this in our newsletter. If you haven't yet subscribed, you can go to Coinage's Substack and subscribe. We'll link to all these things. But the idea of kind of following what Trump wants to do here is interesting, because Trump had a bit of an about face in terms of his take on interest rates just last week at Davos. He was basically saying, yeah, I am calling on the Fed to cut interest rates. And on Sunday, he said keeping interest rates steady, the last time the Fed made that decision last week, was actually probably the right thing to do. And so Jeff Park is just kind of walking through here saying that, look, when it comes to this strategy, the U.S. basically still needs to keep printing money. And how can it do that while also keeping interest rates lower? And that's kind of, this trilemma that Jeff Park's talking about here, is that you want to keep the dollar structurally overvalued, the U.S. always needing a persistent trade balance deficit, and 3, the government needs to borrow persistently cheaper than it should be able to. The U.S. wants to keep number 3, but rid of 1 and 2. How? And President Trump may be using tariffs to do just that. His main bet here, though, and obviously as we've covered on Coinage many times before, is that in the long run, all of this is good for Bitcoin, because in the long run, Jeff Park is using this to say, mark my words, the 10-year is going down, whatever it takes. And if you think about it, that does tie back to why President Trump would want that to happen, because if you're a real estate investor, obviously the 10-year is pretty much tied to, borrowing for all of these things. And it does seem like if you put all the pieces together and you believe this thesis, which I would tend to do, is that, as we know, interest rates going down, particularly here to point out the 10-year going down, does help the price of Bitcoin and add to some of that risk on sentiment. And so, it's too early to tell exactly what is the driving force between some of these tariff moves and how it impacts everything beyond just some of the panic or unwind to the carry trade that we're seeing play out. But I think in the long run, I think that's right, and I think all of that does add to a pretty large boost. The other thing to highlight, I guess, in some of this is the Bitcoin dominance. And I think that that's a big piece of maybe something to point out, because some of these moves in altcoins are pretty outsized. I mean, we could just go through right now and try and find some of the worst 7-day moves, and you'd kind of be surprised some of the names on that list. Pudgy Penguins, if you got that airdrop and didn't sell when you got it, not a good week for you. When you look at some of these things, 43% off the 7 days. WorldCoin, another one of those, off. Trump, off, if you didn't dump or get in early enough on that one. Virtuals, off. AI, basically everything getting spanked, except for Bitcoin. And again, that's kind of what I want to highlight here in terms of why we're seeing that rotation. A lot of people had thought altcoin season was here, including some really smart people that we've had on the show. Not the case. Not the case at all. We didn't expect this to come up like this. Here's a chart. If you want to look at Bitcoin dominance, I personally didn't expect this, especially after we had Cosmo Zhang on from Pantera saying, hey, look, altcoin season's upon us. Get ready. You didn't expect to see Bitcoin dominance get back above 61.5, but there it is. And so some of this is important to keep in mind. I say this because we just got back from El Salvador. We just got back from the land of Bitcoin and Bukele's experiment down there. And I do think it is pretty interesting. We're going to get into that and what we heard from Paolo and Tether and everything. But it does seem, for a long time, this show didn't really lean too much into Bitcoin maxi beliefs. But maybe some of that's changing as we listen to our viewers. Again, if you're not one of our co-owners yet, you can go to coinage.media to buy an NFT and co-own this outlet with us. In fact, right now, I think there's one on the secondary that's even cheaper than the price I paid for mine. And with ETH down, consider that a sale going on right now since everything is priced in ETH. So you didn't hear it from me, but now might be a good time to buy. And I say that because you, again, can shape some of our coverage. And because of everyone who's entered our co-owner ranks recently, Bitcoin has been a lot more and more on our radar. Not, though, this week being supported by one of the biggest Bitcoin maxis we've ever seen out there. That, of course, being none other than Michael Saylor, not keeping up with his buys. I don't want to read too much into this because, of course, there's always a bit of a lagging move in some of this, and he had been buying at some pretty high levels. And with the volatility right now, kind of difficult to run a company that has to go through so many jumping hoops, I assume, to get the Bitcoin that it's buying onto its balance sheets. Probably a lot of approvals, checks and balances, blah, blah, blah. But this week, Michael Saylor and MicroStrategy did finally break their 12 consecutive weeks of buying more Bitcoin. A bit of a dud from Michael Saylor when he comes out and tweets this saying, "We did not purchase any Bitcoin." It's the first time in 12 weeks we've heard him say anything other than, "Hey, we bought a shit ton of Bitcoin." So that is pretty interesting. I think maybe some people are reading into the timing of that being with one of the big sell-offs saying, Michael Saylor's not there. But I think, somewhat interestingly, a lot of people had also been basically saying, yeah, we can tell you didn't buy any because that's essentially $1 billion of buy support that wasn't there and maybe, contributed to some of these downside moves as well. So we have to highlight that. I wouldn't read too much into it necessarily, but nonetheless, Michael Saylor shifting to the sidelines this week and again, breaking 12 consecutive weeks of buying the dip or the top. Depends really on the day, I suppose, but not buying this time around. As I said, I do think it is pretty interesting to think about where we are now in some of this experimentation as Bitcoin dominance again springs to a new high, certainly this year. In fact, if you go back on that chart, I wonder how far back we've seen Bitcoin dominance. No, certainly not. Okay. It's all the way back to April of 21 is how far you'd have to go back to see that high in Bitcoin dominance. So still pretty interesting to consider. And we went down to El Salvador to experiment and even went to Bitcoin Beach to really touch our roots. Even though we are a show that has most of our treasury, if not all of it, in ETH, we went down to the conference, the Plan B Forum, hosted by the people behind Tether. And we chatted with Tether's CEO, Paolo, to chat a little bit more about what they have planned. And it is pretty cool just to kind of see Bitcoin in use at the size and scale of El Salvador, a country booming now down there. Beautiful footage you got here, Texas. This is all you, huh? Well done. Cameraman extraordinaire down there with me on the grounds as we went to Bitcoin Beach. Got to give him a shout out because that man was sweating. It was hot down there. We were trying to figure everything out. Very difficult to get Lightning to work as an American citizen, as it turns out. But it was a really cool conversation to chat with Paolo and think about how Bukele now is thinking about the opportunity in his country to not just have it be kind of this center and hub of Bitcoiners, but also a center and hub of what Tether is trying to do in exporting the dollar around the world. And that is interesting because you've got a lot of other stablecoin issuers now coming for Tether's crown. And we sat down with Paolo to get his take on maybe some of those other ones, including Ripple and Ripple LUSD, RLUSD, to get his take on competition and what it all means. We'll be publishing our full interview with Paolo later this week on Coinage at coinage.media and our YouTube page. But just want to play a little bit of what we heard from Paolo because it was really interesting to hear how he thinks about some of his competitors. And, things got a little spicy. Take a listen to what he told us. When you do look at maybe some of those intertwined blockchains companies like Ripple launching RLUSD, their stablecoin, what do you make of that in terms of what it means? Maybe not just in the US, because you're right, there's a lot of options and a lot of ways to pay, but what it means from just kind of the competition in differentiating Tether versus those. How do you look at what they've tried to say about you and what makes Tether different?
Look at what Bitcoiners say about them. Look at what Bitcoiners say about us. All the Bitcoiners are here for a reason, because we share the ethos, the philosophy of Bitcoin. So, look, we started as a small company, like a couple Italian guys, and we exceeded our expectations. We made enormous amount of profits that are almost unthinkable. We didn't extract almost anything from the company. The vast majority of the profits are within the company, to be reinvested in boots on the ground, in opportunities in all the emerging markets. So we are investing in our business model, but in our communities.
Yep.
I mean, if you look at our competitors, ask them to point on a map where any of the countries that I mentioned are, and see how many they get right.
So, I mean, there's Paolo with a little shots fired. We chatted about Ripple's RLUSD. We chatted about USDC and the DPEG and why he thinks that Mika and the framework over there could potentially lead to some problems when it comes to stablecoins in the EU as well. So pretty broad interview. We sat down with him for more than 40 minutes and walked through everything, and a lot more in terms of what he mentioned there on investing and taking some of those profits and putting them back into the communities that they are trying to expand and invest in, including El Salvador, which is why I think it's interesting that Bukele just kind of, we asked Paulo, he says don't read too much into the idea of taking Bitcoin and making it forced legal tender down there where businesses have to accept it as payment, to whether or not they want to optionally accept it as payment. It's a slight change, it's a nuanced change, but if the adoption wasn't really there for Bitcoin anyways, and people prefer spending dollars as they do in El Salvador, offering and leaning into Tether and inviting them to now establish their headquarters down there is a pretty interesting move for President Bukele and El Salvador, and could wind up actually bringing, I think, more innovation to that country than maybe what his Bitcoin bet originally was all about. And so very fascinating interview. Appreciate Paolo for giving us the time down there on the ground. I was told more time that he gave to us at Coinage than any other publication in terms of a sit-down interview. So, hey, listen, man, if that's true, shout out to Paolo for supporting community-owned media and letting us talk through that. But, I mean, after we did the interview, we had this announcement, which is basically the big one, that Tether reported $13 billion in net profit for 2024. So that was basically how much they had made last year. And, also well done to the team for kind of organizing this conference, having everybody down there, and then hitting them with that bam right there. That was more than double what they made the year prior in net profits. And so, again, he's not lying when he says they've probably exceeded the expectations that the team had in how big Tether's gotten. But now a question of what they want to do with that money. And I think that that's kind of one of the other interesting pieces to continue to inspect and look at as Tether grows and expands in El Salvador and beyond. So happy to bring you that interview, as well as an update on some of the other things that we mentioned when it comes to one of the projects that we've followed here as well in our run of show over here. We're going to shift down to THORChain as we talk about, I don't know, this one's interesting. And, everyone can kind of dunk on THORChain if they want, as certainly I'll bring up some of that price action here too. But just to explain some of what's been happening, Rune is the token that powers THORChain. THORChain, one of the largest cross-chain decentralized swapping protocols out there, used by OKX, used by Trust Wallet under the hood. A lot of people don't necessarily know the name or necessarily even know that you would need a token to power some of the cross-chain swapping between Bitcoin and Ethereum. But THORChain is where a lot of people turn. It does a lot of revenues. And basically they got into a bad spot because they had launched saving and borrowing mechanisms on top of what they do when it comes to swaps and got it wrong. And you heard from one of the top builders in THORChain, JP Thor, saying, yeah, look, it takes some huevos to come and say, yeah, look, we didn't get this right. I'm sorry. I tried to back this product, didn't do it right. And, if you look at the price action as word spread that, hey, they might be insolvent, you basically are down pretty significantly, 73% over the last month. And, I would throw myself in the camp of people who probably also missed what was going on with the THORFi stuff, because I was watching the increasing amount of swaps and how many people had been onboarded to use this. Again, as I said, some of the major players in crypto were using THORChain. And so if you look at the swap volume, that's been going up. And so you got to say, okay, they'll be making revenue somewhere around here. And if you missed out on the other side of things, which is a poorly built lending and poorly built around too much leverage in the space, then you need to figure that out. And that was partially due to the sell-off. And that is what I want to bring up as well, which is basically, how do you unwind that? How do you fix it? What's the right move to handle that and say, okay, we may be $200 million in debt now, but we do have one of the largest swapping protocols and it's making money. And so how can we try and figure out a way to get out of this mess? And that is where people were up and down over all of this weekend, basically trying to figure out, is something going to get fixed? Is there a plan? What are we doing here? And I do feel bad for a lot of people in the THORChain ecosystem because, again, it's the same kind of flow back to the idea of Terra Luna and getting caught in that. If you don't know, and you got a lot of money in this project, you feel like you're on the outside looking in. You feel like there's a lot of people who are in the room trying to solve this, who know more information about things than you do, and you're just kind of stuck there waiting and hoping, and you can't sometimes ride that wave. And so, you sell, you get out, you get in, you panic. And in the wee hours, I believe it was either Saturday or Sunday, but more details coming out now about that plan. And basically, they're going to launch a new token that will do somewhat of a traditional restructuring on chain, launching a new token that gives 10% of the revenues of that swapping protocol that I mentioned in a new token, TCY, which will be distributed and hopefully approaching a rate of 1 TCY per dollar. Of course, it's going to be interesting to see how long that takes to actually happen. At least the airdrop will be done in that accounting, I suppose, to make people whole. But obviously not the space that I think a lot of people wanted this project to be in, myself included. One of the projects that we highlighted as a project of the year, certainly I think mostly for what it does as a project, which is important infrastructure in the decentralized swapping space. And that's why I think it was interesting to see so many people in the THORChain ecosystem and others around it step up and say, look, this is an important thing to save. And that is basically the plan that was landed on here. Proposal 6, people came together, voted on it, and that is the way the THORChain will be moving forward. And so we will wait and see as this is implemented over the coming days to see if TCY does, in fact, reach and surpass $1 and actually have this plan manifest itself the way that they hope it does. But since it's one of those projects we've talked about, important to provide the update there. And potentially, I don't know, if there's an opportunity there, if you believe in the idea of, hey, can we pull off an on-chain debt for equity swap like this that normally happens in the traditional world, where you have a project that runs into insolvency issues, but does still have technically a business there that could potentially, as I've kind of talked about, could potentially bring so much more attention to how THORChain works and how Rune works. I don't know. There is obviously downsides of building in public, but sometimes there are upsides of just being transparent. And, it does seem like that is what THORChain finds itself in now as people try and navigate, hey, will this work? Will this not? At the very least, it's all laid bare for everyone to make their own call now. So interesting to see all that play out, because it is historic just in the kind of way that I personally haven't seen anything in the crypto space have to face something like it, see the panic unwind. And now today, weirdly, as everything else is kind of getting shellacked, THORChain not doing so bad when you consider it's rebounded off that low of $1 to 136, 140. So I'm just putting that out there. You've got the context now. Do with it what you will. To wrap up the show, we are taking a closer look at some of the Fed speak that is coming out today and this week, because I think it will be an important thing to continue to pay attention to, especially as we are seeing the impacts of Trump's tariff strategy have so much of an impact on crypto. And of course, earlier this morning, we did get ISM numbers. So still big questions around what is going on with the Fed's thinking. And as I said, big questions around how Trump really wants to use these tariffs. Because if you think about it, the Fed watches what's going on in the data of the economy, but what it doesn't do is ever try and talk too much about what's happening when it comes to, fiscal policy being set by the president or Congress with their trade wars. And so I think a lot more people are playing catch up in what Trump's really trying to do with these tariffs. And I think a lot more people are realizing that the data's lagging. A lot of them are lagging indicators, like the prices that might go up from some of the tariffs being imposed will take some time. And so if you think about maybe front running some of this stuff, it is interesting to pair the dots and see what Trump's trying to do. But as this headline from CNBC indicates, a very interesting kind of shift in the way that Trump is no longer bashing the Fed. Now basically saying that, yeah, I give credit because I would have kept interest rates steady too, even though he said just a week ago at Davos that he would continue to call for a drop in interest rates. And this morning as well, we did get the ISM numbers, which came in pretty strong. And so if you put everything together, I'm just trying to bring up that release, but if you put everything together, then you've basically got, I think, the bones of a pretty good rebound here. And right now, the headline as we wrap up this show is that it looks like tariffs with Mexico might be even paused. And so if you think about what Trump's trying to do with some of these things, the same way that he did with Colombia, the same way that he's doing with every country, is like walk softly and carry a big stick. But now Trump's waving that stick, and it's unclear to pair what's really going on with his economic plans, monetary plans, and fiscal plans, all of that big time TBD. So just strap on your helmets, if you will. Crypto's volatility is back. That's what we all signed up for when we enter this space. There are buying opportunities. There are places to take profits. If you expected up and to the right under a new president, probably throw that playbook out the window because that's not going to happen. But obviously, as volatility presents itself, you've always got some huge opportunities. And this is the last thing we'll just throw up on the screen here because, as our friends at Fundstrat were pointing out in terms of expectations, ISM, and again, that's just kind of like a measurement of manufacturing. The expectations is at 49.9, the indicator there. Usually 50 if you're above 50, you're expanding. If you're below 50, you're contracting. Expectations were for just under 50, and it came in at 50.9. 50.9 is the first time that ISM exceeded 50 in 26 months. And so if you think about where the economy's at, the way that it's moving, potentially some things there to feel a little bit better about even after this weekend's big sell-off. And I think it's a good space to leave it for the time being. And so that'll end our Monday show as we come to you every week from Coinage, highlighting the biggest stories in Web3 and around the now. Unfortunately, we got to include a lot more macro stuff just because the president's here shaking up markets. And I think it's important to provide some of that context as people could potentially be completely wrecked, depending on how leveraged you are. So it's not just crypto anymore, buddy boy. It ain't just on-chain shit around here at Coinage. It's also sometimes going to be some macro. And of course, if you don't like that, tell me I'm wrong. Minted NFT, hop in the Telegram, co-own Coinage with us. And as always, you can head to coinage.media to learn more about us and catch the biggest headlines around the world of crypto this week and every week. For everybody here at Coinage, I'm Zach Guzman signing off. Thanks again for tuning in.